lots of economists getting it wrong, saying that inflation was going to go up, but it actually fell to 6.7% in the year to August. We have the prices for milk, cheese, eggs and vegetables falling last month, although the price of bread and cereals rising, and petrol and diesel went up as well. But a slowdown in rising food prices and a drop in airfares and accommodation apparently helped drive the overall rate of inflation lower. It's still at 6.7%. That's still pretty high. What do you make of this, Julian?
Well, I think it's important not to get too carried away. The figures are clearly good news, but they don't mean that prices are falling outright. They mean that prices are still rising just at a slower rate. If you look at food price inflation in particular, that's still running at 13.6%. So that's still the strongest component of inflation in the whole index. So I think it's important not to get carried away. But the good news is the underlying trend here, so that there is a measure of inflation that excludes food and energy. I'm not saying those things aren't important, but they are relatively volatile. And that measure fell particularly sharply from 6.9 to 6.2%. And that's something the Bank of England is going to watch closely. So I do think this should give the Bank of England more confidence that it doesn't need to raise rates further, if at all. And also,
do you think they will? Because we've had those. Sorry to interrupt you, Julian, but of course we've had the Bank of England raising interest rates. What was it, 14 consecutive times? Is that correct? Yeah. I mean, would you think on the 15th occasion, which is presumably coming up pretty soon, they will say, actually, hold on a second, maybe we need to hold fast or even reduce?
Well, some of us have been arguing for some time that the bank should have hit pause on interest rates already, several meetings ago. It does take a while for all those interest rate increases and other things the bank is doing to feed through into the economy. So it's rather like boiling a frog. By the time you realise you've done too much, it's a bit too late. So if I'd been on the Monetary Policy Committee, I would have voted to pause rates several months ago. And indeed, at least two members of the Monetary Policy Committee would have agreed with me. I think it's probably more likely than not that they will announce another increase in interest rates tomorrow. But I think the more important thing now is actually the statement around that. And I think these numbers will make it easier for them to say that interest rates are now on hold, and maybe even that the next move in rates is just as likely to be a cut as an increase.
How much is Ukraine coming into this? Because obviously that affects food prices, and obviously in regard to Russia's invasion, that was one of the factors pushing up prices at the supermarket tills. And we don't hear as much about Ukraine now. We'll be examining it in some detail on my Saturday show. But certainly, I just wonder if that is still a big issue in terms of exporting goods like sunflower oil, wheat, fertilizer, that kind of thing.
Well, it's certainly one of the reasons why some individual prices are rising faster than others. But when looking at the overall level of inflation, I think it's important to step back and look at the bigger picture. And the main reason why inflation has been falling sharply recently is that the growth of the money supply has slowed. So a couple of years ago, the Bank of England was printing enormous amounts of money, cut interest rates close to zero. It was that led to the surge in inflation. More recently, interest rates, of course, have been rising, and monetary growth and credit growth has slowed. And those are the factors pulling overall inflation down. Now, as it happens, individual prices, whether that's fuel or food or what's happening to restaurants and hotels, there are specific factors driving those. But if you want to understand where inflation is heading over the next year or so, you need to step back and look at that bigger picture. And that does point, if anything, actually, to the risk of deflation over the next few years, where inflation is actually too low rather than too high.
It's interesting when you look at latest figures in other countries, 6.4% in Germany, 5.7% in France, 5.5% in Italy, and 2.5% in the US. Why is it so low in the United States, do you think?
Well, first of all, we're not that much of an outlier if you look at across Europe as a whole. I did a chart earlier on X, or what used to be called Twitter, showing that we're pretty much bang in the middle of the EU countries. If we look at the 12 biggest, and we were still in the EU, we'd be bang in the middle of that group. So our inflation rate is pretty similar to the rest of Europe. The reason why it's slower than some other countries, particularly the US, is basically energy prices. That's still the really big difference. The US didn't have as big a rise in energy prices as we did, and the level of energy prices in the US is still relatively low. So there are lots of factors feeding into that. I'm interested to see what the Prime Minister says later about the net zero agenda. But it's basically energy prices that are the difference. There are a few other things as well. I mean, we have a higher rate of inflation than Germany because Germany's in recession.
Yeah,
so
yeah.
I'd rather be in our position, frankly, than theirs.